Welcome to the night where we light up the spark. We're trading crypto, finance, you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, I shatter ceilings made of glass. Mad on the charts with rulers by light. Markets soaring through the night. Follow the trends, see future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar.
Good evening. Good evening. Good evening. Good evening. Welcome to Markets After Dark, where we go mad on the charts. Thank you for joining me. I'm Lunar Beaches Crypto, coming to you live right here in the Piper Academy Network, Sunday through Thursday, 11 p.m. Eastern Standard Time. It is Macro Monday. There's a lot to go over. A little bit to go over. It's FOMC week. It is May the 4th. May the 4th be with you all. And you know what Macro Monday means. It means it is time for a new segment of This Week Tonight. Let's go ahead. Just jump right on into it. Macro Monday, Fed awakens. Welcome to Markets After Dark, where we go mad on the charts. And tonight, folks, we're diving headfirst into FOMC week. A magical time when a room full of unelected economists get to play God with your mortgage rate. Last week, first quarter GDP came in at negative 0.3%. That's right. The economy is contracting faster than your dating options after you mention you still live with your parents. And guess what's helping drive that contraction? Tariffs. Yep, the Trump administration's trade policies are working harder than a Starbucks barista during pumpkin spice season. April's jobs report added 177,000 new positions. That's like the economy whispering, really trying. It's not bad, but it's not the kind of number that gets Wall Street hot and bothered. It's the participation trophy of labor data. Inflation stable. Inflation held steady at 2.4%. Now that is a number we can vibe with. It's like finding out your rent didn't go up this month. You don't celebrate, but you exhale through your nose a little harder than usual. All right. So what does the Fed do in response to all of this? Absolutely nothing. They're expected to hold interest rates steady at 4.25 to 4.5%. Because when the economy's slipping, jobs are stalling, and inflation is neutral, clearly the best move is to kick back and do their best impersonation of a DMV employee on lunch break. Now we've got round 947 of Trump versus Powell. Meanwhile, President Trump is pushing for rate cuts harder than he pushes Big Macs on foreign dignitaries. But Powell's like, oh, we're data dependent. Yes, we depend on the data. Translation, we don't negotiate with orange people. Markets are still pricing in 4 rate cuts this year. 4? 4? Is that right? 4? That's not forecasting. That's fan fiction. That's like me expecting Bitcoin to hit 200K just because I said, please, Bitcoin, please hit 200K, Bitcoin, please. So here we are. GDP is down. Jobs are mid. Inflation's calm. The Fed is paused. Trump's yelling. Markets are dreaming. We're sitting here trying to make sense of it all, one sarcastic monologue at a time. So, we'll keep watching the data, the Fed, and the fantasy rate cut fan club. Until then, stay sharp, stay mad. Thank you all for being here. Let's go ahead and bring up the madhouse. What is going on, everybody? How are you doing? Hope you're doing well. That was this week tonight. Hope you enjoyed that. I'm enjoying putting those together. I think this one was probably the best one yet. A lot of fun. Go ahead and say good evening to everybody. Good evening, Indie Rock Crypto. Let's mother effing go. Love Nye. What's going on? Volatility imminent, potentially. Though, well, we'll get into it. Hi, LBC. I hope you had a nice weekend. You too, Alexandra G. Thank you for being here and showing up to my second stream of the day. Do appreciate you. All set. Same to you. Hi. How are you? Hope you are doing well. Indy with the first touchdown. Yep. Indie Rock Crypto did make first landing on the chat. Robert Mulligan. Good evening, my friend. Hope you are doing well. And Harp's in here as usual. Thank you all so very much. And yeah, thank you all for being here. I do appreciate each and every single one of you. Before we go any further, please smash that like button and hit that subscribe if you are new. Hitting that like button is actually the best way that you can support the channel, but of course also subscribing and sharing with your friends, family also helps, and it costs you absolutely nothing. But you can join the Discord and become a member today for only $5. That is right. We have cut our prices 75%. And you get all kinds of perks with that $5 membership. I mean, considering that one of the subscriptions that we use inside of the Discord is like over $100 a month or something, and you only have to pay $5 to get that subscription, I think that's a deal. Not only that, trade ideas, trade setups, learn how to trade, help with all different kinds of things, members Q&A, a TA lesson once a week, I believe, and yeah, a whole bunch of stuff in that Discord link pinned right here in the chat. Thank you, Alexandra G, for pinning that in the chat. If you're watching the playback, in the description. All right, guys, so let's go ahead and get into this little man right here. This guy, Mr. Bitcoin right here. How are you doing, Mr. Bitcoin? This segment brought to you by Blowfin, NordVPN, and Chart Prime. And that means the rest of the show. Oh, man. So Bitcoin, let's go ahead and go out to the weekly. Let's just clear absolutely everything and actually go to a different chart. Go to a spot chart. Let's go to Coinbase. All right. So cleared everything. All right. So last week I said I would expect a mostly sideways week. That is pretty much what we got. We did get the little pop up on Thursday. and not much follow through on that. And this is what exactly kind of what I was expecting and anticipating. So now the next order of business, now that we have completed a fair value gap, this 3 candle move in here, right here. 1, 2, and 3. 3 candle move. The wicks of the first and the third candle make up your fair value gap. Go ahead and pull this across. So this will be my area of interest for the week. I want to see if we will come down into it. First thing is sweep that the last week's low, and then see if we can get down to the midpoint of this fair value gap down here at about $89,626. We do not have to come all the way down. We also can go all the way through and then come back up. But the main thing is going to be getting into the fair value gap and then going down to the lower time frames, 15-minute or so, and trying to find a shift in market structure as we move to the downside. Now we do have some equal lows all up in here, so I would expect us to at least come down, take those out. Could be an order block in here that's enough for us to bounce off of. We also want to bring up a Fibonacci from low to high. We do have a 0.382 sitting right here in that area at $92,626 per the Coinbase spot chart. So I would like to see if we can come down and test that. That 382 is below all of these lows, even this low over here. So that would be enough technically of a sweep of these lows before we move to the upside. But with that said, we do still have the 50% retracement deeper into the fair value gap. That 50% retracement coming in at $90,968. So I'd be keeping an eye on that. And the midpoint of that weekly fair value gap rests right above the golden pocket of this range. Let's pull a fixed range volume profile of just this range. You can see that the value area low is right below all those lows as well. We have come down and tapped. Have we tapped it? Come down, yep, and tapped the point of control. We could see a short-term bounce, potentially maybe overnight. Get a bounce up into this imbalance in here where we just have this straight line down. So we have an imbalance there in the chart. Also have that high volume node sitting right above us. So look for a rejection between 95 and 95,250, I would say 95,250, and then a potential to move even further down. The question from then will be, how low will it go? Will it just come down to the value area low, or will it lose that? And if it loses that, then we see that really no spike in volume until we get to about 91,500, and then just below that at the 0.5 is at 90,968. Then not much left below that. Now if we zoom out even further and we take in more of this range, we'll go from the very low to current high. We are sitting on top of the point of control. So, but again, we do have this high volume node that we have fallen below. Could see a bounce and then a rejection and then another further down, more downside. Now, if this is just going to be an ABC correction, which it could end up being, it's just an ABC, before we start off with another 5-wave structure to the upside, which is essentially what I am expecting and looking for, is for us to come down, ABC correct down, get, a market structure shift, get a wave 1, 2, 3, 4, and 5, and then carry on our wayward sons. Let's pull in even more data. We're going to take in the top here, and right there we have that value area high sitting right there, right in the middle of that golden pocket. Sorry, my eyes itching. Right there in the middle of that golden pocket, sitting at 89,311, right there at that 618, which is also the midpoint of the fair value gap. So I would say that I am definitely, just from the 50% retracement onward, this is going to be where I will be looking for potential reversal. I'll even take in this low right here. And that's it. I want to see a reversal out of this zone right here. God, my eyes. I swear, I might be allergic to freaking thing here, because every time I come up here, I either get my eyes itching or my nose itching, or maybe it's just this room. I don't know. Anyways, yeah, that's what I'd be looking for this week. Potential retest of $88 to $90,000. Now there is an off chance where, well, we've already broken that trend. There is an off chance that this just turns into a megaphone pattern and we just go ahead and continue higher from here. Probably, maybe not this week, with it being FOMC week, and the market is anticipating a pause. So it's kind of almost like a certainty that the rate decision itself isn't going to be what causes the markets to move. It will be Powell's press conference following the rate decision. Now, this can break down well. Take the opening of a rising, broadening wedge. If it breaks down right here, wherever it breaks down from, usually your measured move target, again, getting us right around that midpoint. That's $90,700. So this looks like a good point to potentially DCA from, but I will look for that reversal first before I consider buying. So if price comes down in here, let's just say, let's give ourselves some highs in here, come up, take out this high, pull back, and then continue. Then if it consolidates, that would probably be the best time to hit that long, even if it comes down, sweeps those lows, and then shoots up. That's what I'm looking for Bitcoin. So Bitcoin, that's what I'm looking for on the Bitcoin. So we've got ISM Services PMI tomorrow, which could be a market mover at 10 a.m. Eastern Standard Time. Forecast is 50.6. Now this one is going to measure your contraction versus expansion. So we're actually expecting some to remain above 50 is some expansion, but it's kind of neutral. We really want to see that thing. This is services PMI. I might be thinking of manufacturing. The non-manufacturing ISM report on business is based on data compiled from purchasing and supply executives nationwide. Survey responses reflect the change if any, in the current month compared to the previous month for each of these indicators. Business activity, new orders, backlog of orders, new exports. This report shows the percentage reporting each response and the diffusion index. An index reading above 50% indicates that the non-manufacturing economy in that index is generally expanding. Below 50 indicates that it is generally contracting. I don't know why it says declining, but it's contracting. So we want to see if we get a beat on this. I don't know. If we come in higher, that might actually be a little more bearish, because that would mean labor market's probably still hot, which means the Fed probably stays paused for longer. Although, even though we're expecting a pause this week anyway, I don't think this is going to really have much of an impact on the Fed's decision this week. I do think that last week's data with the core PCE coming in lower, that could give us a more dovish Powell this Wednesday during the Fed press conference at 2:30 Eastern Standard Time. The interest rate decision will come in at 2. Expected to remain paused, as I said, at 4.5. And then we'll hear from Chair Powell, the rise of the Powell coming back for our money by inducing volatility in the market, potentially. But like I said, since we are expecting a pause, there might not be much going on. We might see some other news drop this week that moves the markets. So I would just be looking out for any kind of potential news like that that might move markets outside of the Fed press conference. Now, if Chair Powell, well, let's just do the surprise rate cut, markets probably go crazy. Surprise rate hike, almost no chance of a rate hike, probably. Because if they did a surprise rate hike, markets would absolutely tank. So I highly doubt they will do a hike. I very much doubt that they will do a cut, and that they will, more likely than not, remain paused. But we could hear a dovish Powell talk about potential cuts coming in the next meeting. Then we'll have balance of trade for China, exports year over year, imports year over year for China, inflation rate year over year for China. Might be some good Asia plays this week, later in the week. So we might want to watch Asia this week. Let's go over to our trading home. Let's take a look at the Dixie. Take a look at the old Dixie Do. How we doing? Falling back below 100. Not looking good for the Dixie, although it is kind of putting in a little bit of a inverse head and shoulders in here. Did get a nice break above, pull back to it, so we could see some upside for the Dixie, which would help with the bearish narrative for Bitcoin. If the Dixie is pushing to the upside, then Bitcoin could stall, like I expect, correct, whatever, for this week, and then maybe next week this will come down and Bitcoin will go up. But right now, this does look like potentially we could be seeing some upside for the Dixie this week. Maybe even sideways and up just a little bit. We'll have to see. We will have to see. Bitcoin dominance. Go ahead and zoom out to the weekly for this. Bitcoin dominance closed a new weekly high for the cycle at 94 point. What was the close? The close was 64.78%. We are currently sitting at 64.74%. And just look at my chart, you can see what I'm kind of have drawn out for what we could potentially be seeing in the future. Very near future, like within a month. Who knows? We'll see. Maybe the rate cut comes in June, and then that's what sends markets flying. We'll see. I say markets, but, well, yeah, markets. Take a look at our market cap. Bitcoin sitting at a $1.87 trillion market cap. What's going on, RS Miller? Thank you for being here. I appreciate you, bro. Hello, hello, hello. Hello, hello, hello. What's going on? There'll be peace when you are done. Shout out to Alexander G. Bang, bang, gang, gang, gang. Ding, 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 ding. All right, so we did come up to that 1.618 and get a rejection. So we're really needing to flip that on our Bitcoin market cap. Let's see, we've got Ethereum still came down below its 2023 lows, swept this range low, and swept this consolidation range low. So we need Ethereum to, which I could see a ton of altcoins getting that pullback with Bitcoin this week before they all ultimately move higher. I would like to see Ethereum get back above that $2,100 mark and hold it before potentially considering more upside. We do have more downwards trending resistance coming in here that we need to get above. We have broken out of this downwards channel, so now it's about getting above this downwards broadening wedge. So that's what I want to see on ETH. Yeah, still looking for some downside. Even the sound is very low. Wait, having issues staying. It keeps crashing. All good for me, no issues. Okay. Well, I'm very good. I'm very glad that someone's not having issues, because we did have issues on my Lunar Beaches Crypto channel earlier today. I came back with a second stream and it worked out just fine. So hopefully it's not as bad as it was the first time. Good here too. Try reset. Okay, thank you. Total crypto market. We got the breakout. We got the break above a swing high. That is good. We got the weekly close above it. We got some daily candle closes above it. So the overall crypto market, which is mostly propped up by Bitcoin right now, is holding on. But once we go over to our total 2, we can see, all right, well, we still have some work to do on our total 2. We do have a little bit of rounding in here that doesn't exactly give me any kind of warm and fuzzies. I really want to see us do something like this and just get above that $1.1 trillion mark for the altcoin market. This does include Ethereum but excludes Bitcoin. We need to get above that high here in order for us to have any kind of potential continuation to the upside. Let's turn on the Market Oracle Pro. Look at that dynamic reactor. The dynamic reactor is sitting right there at that high right now. So clearly that is the area that we need to get to. Let's go back to the total. I want to look at the dynamic reactor. So in total, we have gotten above the dynamic reactor and we have flipped it green. And we probably have for Bitcoin as well. Yep, we got above that dynamic reactor on the daily. So got above that dynamic reactor, flipped it green, and we could get a push down to it to test it right there in our fair value gap. We have flipped our money flow also to green on Bitcoin, and our trend fusion is above the zero line. So we can get some nice waves in here and start to really pop back up, get that money flow coming in a little thicker. That would be really nice. Our volume matrix is green and thick, and our power bar is green, but it is fading. So we want to see this start to fade back in after fading out, which personally, after this big move that we had, not surprised to see us kind of calm down a little bit. And we'll see if we can hold that daily dynamic reactor. Going to the total 3, this is Bitcoin. This is the crypto market cap, excluding Bitcoin and Ethereum. It has made its way up to the dynamic reactor, however, not getting above it and showing any kind of support just yet. But getting above that high there, and it would also get us above that dynamic reactor, and we could see something like this. So altcoins still have work to do. DeFi is about the same. I mean, pretty much the exact same. Got that dynamic reactor sitting above us on the daily that we need to get above and that high, and then come on top, consolidate, and then continue higher. That's what we need for our bullish cases. Otherwise, every single one of these, this is going to be the resistance. So if we get a rejection, expect us to come down and test lower prices. Every single one of these. That's what this could potentially look at. This could turn into a giant inverse head and shoulders, and then we just have to wait longer before we move higher. So just be cognizant of that possibility that we might get rejected, even if things start to look like we are in the clear. But again, all of that depends on whether or not we can break through this level. That'll be for the others chart, which is everything outside of the top 10 in crypto. Our total 3 is going to be about the same. Our total 2 is the same, and our total has already made it above all levels because it is supported by Bitcoin. So we might just see this go flat for the week on our total, as Bitcoin still dominates the rest of the market, and we could potentially see some outliers in our altcoins popping off this week. So this hasn't flipped over to the green on our money flow, so still need that to come in as well. Taking a look at our ES, let's go down to the 15-minute, or make sure, I believe we are on electronic. Yep, electronic trading hours. When did we start the week? ICT kill zones. Where are we at here? Guess this is Friday, Sunday. Where does Sunday start? Right here. So we did get a little bit of a gap down to start the new week. Yeah, let's zoom out. Let's go to the daily, see what we are looking like here. Okay, so we're getting a rejection at the daily dynamic reactor. So starting the week, pushing to the downside. We do have a little bit of a gap here that we could come down and visit, and potentially come down into this wick as well in this candle right here. So I mean, if we're going to get a pullback in Bitcoin, it only makes sense that our equities are also going to be getting pullbacks at the same time. And same with our NQ. You know, it's sitting there. It did get a close above the dynamic reactor and turn the dynamic reactor green, so it could just get that quick push down. It's also got the same kind of gap at the S&P, and then so we want to see it get down there, get to that 236 at 19,607 points, and then get a bounce off of that level for us to maintain our bullish structure for the NASDAQ. NASDAQ is basically tied to crypto at this point. And our Dow Jones, the weakest of them all, nowhere even, I mean, it's close to its daily dynamic reactor, but very far from its high from over here. Although we did get a break above this high, a nice close above this internal range high, creating a higher high. Now we just wanted to put in a higher low. We do have a little bit of a gap here, but I'll be watching the wick right here at this level, at this 40,370 level. We're watching that wick right there, and we do have, some support below us as well. But we did get a bounce off of that 0.5, that 50% retracement. Now we're just looking for some follow through in here and break these highs. That's really where we're at right now. We're wanting to see some follow through, breaking through the dynamic reactors on the daily. The only thing that's really done it out of everything that we've looked at so far, well, did the ES did not do it. NQ technically broke above and turned it green, but I wouldn't, it's kind of still sitting at it. The only thing that's had a convincing break above the daily dynamic reactor is that we have looked at so far is Bitcoin. So take a look at the Russell 2000. How are we opening up this week? Let's take a look. Opened up, pushing to the downside. Did have a nice gap down here. Kind of lose the dynamic reactor on the 15. Let's go to the excuse me. Go to the 1 hour. Do have order block down here. We do have the dynamic reactor down here as well, and a little bit of a gap right here, right there at that dynamic reactor. But zooming out, we kind of had this parallel channel going in here. Let me get rid of these. Thank you for joining me, guys. Don't forget to check out Chart Prime, link in the description below. Get 45% off your first month. Chart Prime, where indicators indicate. Yeah, if we get a nice capitulation wick going into FOMC, I might snag ad at the right numbers. Yeah, maybe. What's going on, Flat Smack? Hope you're doing well. Thank you for being here. You trade the FOMC extravaganza? Absolutely. Absolutely. Scalper's paradise is when there's volatility, my friends. Just another day in a rock star's life. Who? Harp? You're a rock star? What's going on? Yeah, the Russell 2000. These are your 2000 low market cap stocks. This moving to the upside signals to us that the market is becoming more, the overall market is becoming more risk on. So that's why we look at the Russell 2000, because we want to see what is the market thinking. Are we going risk on or risk off? Our USDT tether dominance getting a nice little bounce here, but this could easily start to falter this week and then maybe push down coming into next week, and that is what gives us our next boost to the upside for our cryptos, for our Bitcoin and our altcoins. Potentially. Potentially. But this is kind of a rounding formation. So generally, I would think it would at least come up to these lows that it broke before rolling over. So more confluence as to the sort of sideways bearish narrative for the week, as with the Dixie moving to the upside and the USDT dominance moving to the upside as well, with our money flow hovering above that zero line, staying above the zero line, and trying to get some curvature to the upside. It might just give us a little blip before it pushes back down. Same with our trend fusion, giving us that little bump in the road before continuing to the downside. So if we're looking at this as like a consolidation range, I'm just looking for a sweep of the high and then come back down and push even lower. What's our Apple looking like? Apple stocks, well, let's turn that off. Apple stocks not looking too hot, although earnings came in better than expected, I do believe. Yeah, a little better, not too much better, not quite as good as the other ones, but still watching this upward resistance and that 225 level, really 225.72. Let me make sure 225.62. Really want to watch that level. I mean, of course, it's right there at that dynamic reactor as well, but our money flow is in the green, so that is looking pretty okay. Now there is a gap down here that it might want to revisit before moving to the upside. And if it does get down there, then maybe it might be a good time to purchase. We'll see. Tesla, this looks really like it wants to break out here. Honestly, it's kind of, yep. So this is very Wyckoff-esque. I would expect a breakout like this and then get the back test and then continue higher. That's what I want to see out of Tesla this week, over the coming weeks. Get a break. I do love to see consolidation at the highs like here, because that does tend to lead to breakouts. Typically, if you're going to get in rejection, you're going to come in deeper and then pull back and then come down like that. But if you come up and you consolidate at the highs, then you're much more likely to push higher. So we do have that daily dynamic reactor holding us down. And Tesla, what are you doing? Got a gap here on Meta. However, we did break above that daily dynamic reactor, but it is did come into some key resistance here. We'll have to see how it opens up tomorrow. Of course, all of these are closed right now, so who cares? 2 and 10 year, what are we looking like? We got 3.82% on our 2 year, and on our 10 year, we've got 4.308. That's roughly 48 points. We'll call it 48. That's what yeah, it's not above 50, so that's good. That's good. If we're above 50 after getting such a steep yield inversion and then uninversion, typically once you get back over 50 after that uninversion, after they uninvert, disinvert, whatever, when they come back in line, you know what I'm saying? And it gets above that 50 mark, that spread between the 2 and the 10 year, that is almost pretty much always called a recession. So we're not really quite there yet, although I still believe if we are to be bullish, we only have 2 or 3 months left probably, and then ish will hit the fan. We'll see. They're talking about shelves being empty as early as this month, so we shall see. What's going on, Trade Intuition? Don't forget to hit that like button, or I'm sorry, don't forget to do the bingo bangos in the chat. Hope you are doing well, my friend. Let's see. Get rid of the emotes. Thank you. All right, let's see. Well, I pretty much covered everything, guys. I do hope you all have a great week. No. All right, so biggest gainers. Actually, we can go ahead and bring up the coin glass. Liquidation heat map 24-hour. Not really sure this is the best one to look at. We do have a little bit of heat down here at 92,920. Way more heat to the upside, so we'll see what it wants to do. It might this kind of coincides or goes with what I'm expecting, which is a push up for our B wave. Ultimately, for that to roll us over for our C wave. Go to the 48-hour. Since one Piper gift membership. Thank you, maybe a bandage. Congratulations, lasers. Go pew pew. Yeah, thank you. You are now officially an alumni. Thank you, lasers. We do appreciate you. And we appreciate you, Bandage, for gifting that membership. Very, very kind of you to do. Thank you. Yeah, we do have a ton of money sitting above us. That would be our resistance area if we are to come up to it. A little bit of equal highs up here too, especially between these two. So yeah, and that lines up perfectly with this liquidity sitting above us. Liquidity, as the kids say. Gainers and losers. Oh, over the 24-hour, we've got the top gainers. Never heard of any of these. Oh, Turbo's up here. 1000 Turbo. Gods is up here. VRA. Biggest losers. Rex. Never heard of it. Coma. Never heard of it. Puffer. Never heard of it. SXT. Never heard of it. Why has it got a Binance logo? Looks. Heard of that one. Clanker. Nope. Kekius. No. Alpaca. Absolutely not. PRCL? Nope. Flog? A little foggy? Nope. I see nothing. Nothing of any relevance, that is. Spot flows? How are we looking on our spot flows? No, what was the one that had gems, filter, exchanges? Bitcoin exchange balance. Was it this one that had everything on the bottom? Yeah, there it is. Bitcoin exchange balance, we can see still continuing to trickle out and move to the downside. So balance on exchanges is still pretty dang low. And then what is this? Oh, wallet inflow, outflow. So inflow plus 91,000. Oof. So people buying Bitcoin, putting it in their wallets and holding it, not leaving it on exchange, typically means they are going to wait for either higher prices or they're storing it away and locking it away because they expect lower. Now I'm curious what Rex is. I'm pretty sure it's just a stupid meme coin, but if you want to go check it out, knock yourself out. Bitcoin ETFs. What is this? No data. Flows, USD, IBIT, plus 7,000. 570s. Oh, it's totals. Holding. Wait. 614,000 Bitcoin? 190,000 Bitcoin? 201,000 Bitcoin? I thought Sailor was pretty close. Ain't no way. Ain't no way. Holding. Oh wow. Why I can't into Bybit? What? Cap of 99 million. It is garbage. Oh. 99 million? Not too bad. DeFi. Where's IBIT? What is this? Price? Oh, I don't know about price. Volume, IBIT 2.4 billion in volume. Turnover. Ooh, not good. Shares, IBIT. AUM, IBIT. Market cap 59 billion. Bitcoin. Why is this down? Minus 8.47. So some people sold. FBTC, GBTC. I believe this is Fidelity. This is Grayscale. This is Ark Invest. Bitto, blah, 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 blah. So yeah, you can't buy IBIT. Who can't? Why you can't buy IBIT? Who says you can't buy it? I don't know what you mean by that. I personally wouldn't. What's the point of buying IBIT when you can buy Bitcoin directly and custody it yourself? Why would you let a centralized institution defeat the entire purpose of Bitcoin? What is ruining Bitcoin? What will ruin Bitcoin in the next 5 to 10 years if it's going to ruin it? Governments getting involved in Bitcoin. That's what's going to ruin it. Oh boy, we'll see. Open interest, exchanges. Yeah. So, not really much left to talk about. Sideways and down kind of weak, I think. IBIT is an ETF for like $55. Yeah, there you go. Let's take a look. Bitcoin spot ETF, IBIT, yep, 55.19. And I do like to look at this as well because you can see the gaps here. You can see we've got gaps all the way down here. And if you just put a standard Bitcoin chart right below that, you can see where those gaps are. Those gaps actually come in this area down here, which is where, pull that fixed range volume profile on here. Yeah, we do have a value area low. That high volume node sits right there. And that's right there at the gaps here, at this gap right here. We also have a dynamic reactor sitting down here as well. So do not be surprised if we do get a pullback all the way down to that level down here at, we'll call it 84,500. Could get front run, so keep that in mind. So 85.5 might be a little bit better. Well, just because we could see it get front run, especially if it falls back below 90K. That's why I think 98, 99 might actually hold up, which would just be this gap here, which we could come back down to visit and refill. We can also take a look at our BTC1, which is our CME, and we do have a CME gap down here that has not been completely filled. Just go ahead and I'm going to do this and this one. Sitting at 91,970 to 92,525. So, and we are pushing lower to start the week. So, odds are we will come down, sweep these lows before we continue to the upside. And something that looks very similar to back here, right here. Actually, more like this is what it looks more like. So if I just go ahead and take a bars pattern, we can see this isn't to extrapolate what to expect for higher prices, but just the current market structure that we're in. We can see push up, consolidation, push up to clear the highs, but then come back down, smack right on top of that dynamic reactor. And then from there, we could go ahead and see a big push back to the upside. But only time will tell on that. From there, I would just take it from like here. Because if we are at the ending phase of the market, potentially the ending phase of the market, then you tend to go more vertical than you have in the past. As you get that blow off top scenario. Take a look at gold. Gold potentially looking toppy. We do have a nice wick up here. Let's go to the weekly. All right, so we did get a close below that 2.618 for the second week in a row. It'll be interesting to see what kind of week gold has did put in bearish divergences here on the weekly coming before this big push to the upside. We also have a bearish divergence here. It hasn't signaled it on the oscillator, but it's there. And we did get a clipping to the upside for our true 7 means, and potentially rounding off here on our volume matrix. So I wouldn't exactly go short yet. It does need to do way more before I would even consider shorting gold, and honestly, I don't see why it wouldn't continue going parabolic at this point. So, but just like with everything else, it might just need a little reset before continuing to the upside for its probably final blow off top type of scenario for gold and everything. And that'll end, well, we're not trying to predict time here, but more vertical, the higher we go. So especially once they've already started going parabolic, they'll go even more vertical. After the next pullback and push up tends to be what happens. So there you go. Honestly, I assumed they would subvert and destroy it since I first got into crypto. I thought it was a crypto coin. Holy F, that fit perfectly. Wait, what? Who? Now the question is, does it do this before Wednesday or on Wednesday? Not really sure it matters because I think the market is already anticipating the rate pause, like I was saying at the beginning. And since the market's already anticipating a rate pause, may not get too much volatility this week. But again, it will depend on what Powell says during the press conference. If he signals that, we will probably be cutting rates, or we are heavily considering cutting rates, or anything about cutting rates. The next FOMC, which I do believe is in June. Of course, you're not going to show me. One second. I'll get this for you. Calendar. Nope. 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 Next week, probably. No, week after that. Adults, ADP non-farm. Okay, so it's the week after following that. Then not until July. Is that right? FOMC meeting minutes. Wait, did I pass it? Back up. Back up. Median CPI trimmed. Yeah, May 6th through 7th. After May. Calendars. March. June 17th through the 18th. Okay. So, the week prior to this. Ah, there it is. The 18th. June 18th might be when we get our next rate cut. Fed Watch tool, I'm pretty sure. Oh, thanks, R.S. Miller, for putting that in the chat. Craziness right there. Oh, you couldn't even see it. That's okay. So yeah, June 18th could be the next, could be when we see that rate cut, our next rate cut, potentially, depending on what the economic data comes in before the next one, which will probably be even worse data, considering that a lot of the data that's going to be coming in over the next 6 weeks after this FOMC will be including a lot of the tariff stuff. So I would expect for I would really expect for bad economic data, bad earnings, stuff like that coming over the next 6 weeks or so, or well, yeah, over the next 6 weeks. So we are sitting at 96.2% chance of staying paused this week, a 3.8% chance of cut. Then in June, we are at a 64.5% pause, which is actually down a little bit, but up from 38.7%, 36.7% last week. So we're actually looking at more pause potential than a rate cut. Actually, it increased. Oh no, a week ago we were sitting at 57.2% chance of a rate cut, and that has actually gone down for June. July looks like our first chance of a rate cut. That would be July 30th. So, which that kind of fits my narrative of the rate cuts being what kills the market, what kills the bull market before it helps it, because historically that is what happens. You do often get a rally off of the rate cuts, but then they ultimately roll over. But we are quite a ways away from that. We do take all of this stuff day by day. And with that, I just want to thank you guys for joining me. I do appreciate each and every single one of you. Even this stupid microphone. Yeah, thank you all for joining me. I hope you all had an amazing weekend, and I hope you all have an even better week. Don't forget, if you plan on trading, to use proper risk management. Cannot stress that enough. Use proper risk management this week. Could be really choppy, so it might just be a good week to kind of chill, do some back testing, do some journaling. And if you do plan on taking trades, make sure they are in and out trades, because I don't see any long-term trades unless you just want to wait for a pop-up for you to short and then just ride the short for the rest of the week. Might not be a terrible idea, but we'll see. We'll see. I probably won't do that. I'll probably see if we can form a range of some kind and then try to scalp the range. but we'll see. But I'll be back for the next 4 evenings at the very least, right here on the Piper Academy Network at 11 p.m. Eastern Standard Time. And thank you all for joining me. If you wouldn't mind hitting that like button on your way out, subscribing to the channel if you are new, check out our affiliates and our sponsors, Blowfin, NordVPN, and Chart Prime. Links in the description. And with that, guys, come back tomorrow for Good Morning Crypto. I do believe Crypto Coin Mindset. Keith will be on bright and early with BC Port Corp tomorrow morning. I believe that's 7 a.m. No, 6:30 a.m. Eastern Standard Time. Then we'll have the morning market report with Army Piper and the OC guy at 10 a.m. And then we'll have trading with the OC guy at 8. And then we'll be right back here for another episode of Markets After Dark at 11 p.m. Eastern Standard Time. And we'll be going mad on the charts. God bless. Have an amazing, beautiful, wonderful, radical sleep. And I will catch you all tomorrow. Mad love. Peace out. See you tomorrow. Bye.
Welcome to the night where we light up the spot. We're trading crypto, finance, you'll be mad on the charts. Hosted by the one, Lunar Beaches top shark. Dive deep into the numbers cause this ain't no lark. We're crunching all the data, making money moves fast. From Wall Street to the blockchain, making predictions last. Community together in this financial blast. Markets after dark, that shatter ceilings made of glass. Mad on the charts with Lunar's bright lights. Crypto markets soaring through the night. Follow the trend, see the future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the mother lode. Economic loops and the way the dollar flows. Community vibes where everybody grows. Analyzing trends while the world lays low. Markets after dark were only brilliant shows. Hit that subscribe and join the ride. In the world of finance where fortunes collide. Lunar's path will be your guide. Through the market storm or the market tide. On the charts with Lunar's bright light. Crypto markets soaring through the night. From Bitcoin markets soaring plus. Markets after dark, that shatter ceilings made of glass. Mad on the charts with Lunar's bright light. Crypto markets soaring through the night. Follow the trend, see the future in sight. It's markets after dark, the financial flight. From Bitcoin to Ethereum, we're mapping the road. Stock tips and insights, secrets ready to unload. Trading strategies, sharp on knowledge be showed. Let Lunar Beaches guide you to the